Welcome to another video from StageAnalysis.net. Today's video is the weekend update of the major US stock market index and indicators, where I'll go through the major US stock market indexes plus the key market breadth indicators, such as the Bullish Percent Index, the new high and new lows indicators, the advanced decline line indicators, the percentage of stocks above their key moving averages, and some custom indicators exclusive to StageAnalysis.net, including the sector breadth chart with relative performance rankings of the major sectors, and the point and figure breakouts minus breakdown charts. The purpose of this weekly market breadth update is to help determine where stocks will go next based on the combined signals of all of the market breadth indicators, which is referred to in the stage analysis method as the weight of evidence. To see more of the market breadth charts and our daily breakout stocks watch lists, go to stageanalysis.net, and to get all of our latest videos, subscribe to the YouTube channel. Please hit the like button below the video on the YouTube page and leave any comments below as well. Okay, there are a number of charts to go through today, so let's begin with the overview of the major market indexes, and let's have a look. So let's start with on the left here, we've got the S&P 500 large cap index. Not much change to last week really. We had a small pullback this week, which in terms of the actual long-term chart, it doesn't look like much, but as we'll delve into the under the surface data and see if there's more to it than just that. Next we've got WTIC, which is the crude oil chart. As we can see, we had a strong down week, down 7.49%, and moved below its 30-week moving average as well. So it's still in stage one here, but the relative performance is obviously broke down to new lows and it's looking particularly weak. Next is copper, which also had a huge down week of 5.68%. It's pulled all the way back below its minor breakout level here, so potentially back into its stage one range. Relative performance also making new lows versus the S&P 500. And then we've got the gold chart, which, as I highlighted during the week, has been attempting to make a stage 2 continuation breakout. Relative performance has moved in line with the S&P 500, and we've had this cup with 3-week handle pattern here, so it's attempting to make a breakout to new highs. Next, where should I go next? Let's have a look at the percentage of stocks above the 150-day moving average. So let's have a look at them on the individual basis first. So on an individual basis, these are the 9 major sectors that I map out each week. So I calculate the percentage of stocks above their 150-day moving average and minus the ones that are below, and create the percentage from that. So each week I chart them out. As you can see, I missed a few weeks throughout the year, so it's a little bit gappy earlier in the year, but I've been fairly consistent for the last 6 months or so. And as you can see, we've had some strong pullbacks this week. So this financials moved from above 80% and pulled back close to lower in the 70% range here. Tech had a small pullback this week, still above the 70% level. We've got consumer discretionary, which pulled back below a more recent swing low there. Basic materials had a much stronger down move, breaking multiple weeks of movement, so put them back there. Energy had the week's biggest movement, with a move down almost 20%. From it was up above 60% at one point, and it's now down into the 30s again. Industrials also broke a multi-month level here, and broke down below the key 70% level again. And healthcare only had a minor pullback, and staples has been going down for a few weeks now, whereas utilities was the only sector this week to rise. So if we go back to the actual data this week, you can see that this is ordered by percentage strength, so utilities now has 85% of its stocks above the 150-day moving average, whereas energy only has 36%. As you can see, it had an 18% fall this week versus most sectors except for technology and utilities had a very strong down week, which obviously wasn't played out in the index charts, but obviously below the surface a lot of individual stocks made strong moves down back below the 150-day moving average. Let's have a look at this on a visual basis. So I like to map out this each week on a visual basis. So I created my scale similar. This works similar to a bullish percent index. So it goes 0 to 100. And then I've got when stocks are above 60, they're in the bull range, and when they're below 40%, they're in the bearish range, and above 50 is neutral plus, and below 50 is neutral minus. So the majority of the stocks sectors are currently still in the bullish range, although they all had, bar utilities, had a down week. So as you can see, and this is, I also include the NYSE and NASDAQ composite 150-day moving average data as well, which again both had down weeks this week. What we can look at next. Next, we've got the cumulative point and figure breakouts minus breakdowns in the US market. This is another one I do manually each day. I get the amount of double top breakouts and the amount of double top breakdowns, and I get a net figure of both, and I chart numerous charts to do with the P&F breakouts minus breakdowns, and this is the cumulative chart version. So it's obviously gives you a lovely equal weighted view of the market and what's really going on. So as you can see, in the middle of the year we were in this range, but then we broke out in the October sort of time, and we had a little pullback the last few days of the week this week, but the net figure for the week was only down about minus 18, I believe, so it wasn't a huge move this week. Let's go. So next we've got the NYSE percentage of stocks above their different moving averages. So we've got the 200-day, 150-day, and the 50-day. So that's the long term, the medium term, and the short term. And when these are above their 70% level and then move back below it, that's in P&F signals, that's a bear alert signal. So you can see the 200-day moving average made a bear alert signal. We didn't quite get there with the 150-day, and we may even have had a double bottom breakdown on that one. So the 50-day, the short term, may have actually given a bear signal. So let's have a look. Next, we're going to look at the NYSE Bullish Percent Index. Again, we've been in a very strong up move since the October lows, and obviously we had a 2% down week this week. It hasn't made it yet above the key 70% level where it starts to get into oversold ranges, but it's, yeah, so it continues an uptrend currently. This is the NYAD, which is the advanced decline cumulative line. I use a 50-day moving average with it. So as you can see, this has been a strong uptrend since the beginning of 2019. Obviously pulling back last week, but we are still above a rising 50-day moving average, so it's got room to pull back quite significantly and still remain in an uptrend. Next, we've got the momentum index for the short term and the long term. So the the lower one is the 200-day momentum index, and this shows this gives divergent signals. So we can see the momentum has been slowing down, and then when you get a breakdown below the swing low and a divergence is when it gives more of a signal to be more bearish. So that one hasn't yet broken down. The short term at the top here oscillates between a range. So obviously the range has been quite tight throughout 2019, and the zero line is often a good place to add to a position when it gets to the zero line and moves back up again, but obviously it can continue lower, and As you can see, when we're in full bearish mode, it can get down quite far, down to the 1000 level, but its general range is around the 500 level down here. So if we do get a down move, we'll be looking for how it reacts around this sort of level. Next, we've got the US new highs, new lows charts. This has been racing higher for many months now, still very high. It hasn't had much of a pullback yet, so there's not much to see on that one either. Okay, let's give up. What else have we got tonight? So I wanted to include a few of the stocks that popped up in my watch list this week as well, over the weekend scans. So I've got TEAM, which is Atlassian. It had a gap breakout above this near-term high on strong relative volume, so there's potential. It didn't quite make it above the high, consolidated, so it could need to consolidate for a while longer again, or it could continue higher because obviously there's strong relative volume here, but we'll see. Next is PLAN, which is Anaplan. It's got potential for a stage 2 continuation breakout to new highs. It had another gap, strong volume move that will pop up here. Attempted to break out to new highs again, but I didn't quite make it. We've got a bit of a cup and handle type pattern stepping up. Next is Netflix, NFLX. This is a weekly chart versus the two above that are daily charts. I wanted to show the weekly chart on this one because it's got this more longer term downtrend line that it's attacking again. So we had a very strong volume week for Netflix, and it's rebounded off of its 10-week moving average. Next we've got EB, which is Eventbrite. This one is again a weekly chart. It's attempting to make a stage 2A breakout, although it's very early because it's still below resistance from this 2018, early 2019 area where it broke down. So it isn't a very big base at the moment. So I don't generally like to consider them nor in this area. And as you can see, the stage 2 breakout didn't have the required 2 times volume. It would have needed to been obviously up here somewhere to be 2 times the average weekly volume. So we'll be watching this one for continued move with a strong increase in volume and for the red's performance to continue above the 0 line here. Next, I highlighted the various bonds that were breaking out, treasuries and bonds, on my Twitter feed on Thursday or Friday. I think it was Friday. And basically I wanted to highlight in the video as well. So this is IEI, which is the iShares 3 to 7 year treasury bond. We've got multiple treasury charts breaking out to new stage 2 continuation breakouts, and in my watch list scans every day for the last week I've been seeing bond charts breaking out to new highs on stronger volume, and so there's definitely a risk off trade going on somewhere out there. Next we've got DDOG, which is approaching the highs. It had a strong down week here, but it's still obviously building its primary base, so it's got potential to make a stage 2 breakout to new highs. And then finally I've got LUV, which is Southwestern Airlines, which is in stage 1B. As you can see, it's been making this stage 1 base for most of 2019, so that's big base, so there's potential for a stage 2A breakout if we can get back above this 58 level and obviously have a strong breakout week with more than 2 times the average weekly volume. Okay, I think that's the lot for tonight. Please subscribe to the channel if you want to see more and get notified, and please press the like button to get it noticed by YouTube, and thanks a lot, and I'll see you on the next one.